So, Melissa, Apple executives are not giving formal guidance on this call, but they are giving more color and commentary about what they see ahead. CFO Luca Maestri just now saying they expect very strong double-digit year-over-year revenue growth for that September quarter. But he said it is going to be lower than the June quarter print we just saw of 36%. He listed the reasons for that. He said there is a foreign exchange impact. Services, he said, will return to more typical level of growth. The June quarter, he said, benefited from favorable compares due to the COVID lockdowns. And those supply constraints we saw in the September quarter, he said, are going to be greater than the June quarter. And that is going to impact iPhone and iPad. When will those constraints ease? Tim Cook saying he would not predict at this time how long those supply constraints would ultimately persist, but Apple will work, he says, very hard to mitigate the impact. Luca Maestri also giving gross margin forecast here. He says it's going to come in between 41.5 and 42.5% for that September quarter. Of course, it was just 43.3% in the June quarter. Melissa, back to you.
All right, Josh, thanks. Let's go straight to Gene. So, Gene, a sequential decline in gross margin to be expected, supply constraints because of chip shortages, and a question about the bingo word that you had, sustainability, when it comes to the services business.
So services are going to start to migrate back to kind of that high teens growth. So the sustainability is where it was for the past few years. That doesn't have that tailwind. I talked about that 75% of their business that has a tailwind. I did not include services in that. There is a important takeaway from the guidance. Whenever a CFO talks about lower growth rates, my antenna goes up. If you parse through the comments and putting a finer point on Josh's very accurate reporting there, that the growth rate, it really implies revenue for the September quarter of somewhere between 75 and 84 billion. The street's at 81 billion, a pretty wide range. They did talk about the components shortages. They added that the iPhone is going to be part of that. Before it was just the Mac and iPad. So it's iPhone and iPad this quarter. And they said that the impact is going to be greater than it was in the June quarter. So that the translation for that is they're going to be they're going to have component constraints for the new iPhone. And obviously the iPhone is a big part of their business. And so I would look at this in the context of you need to address these three and look at them on a normalized basis. And I think that if they wouldn't have that supply constrained, the real guidance would have been probably somewhere between 82 and 87 billion versus 81 where the street's at. Of course, we won't start to see that, but it does leave a silver lining on all this, which is expectations for the December quarter will probably bump up because the demand that they're not going to be able to fulfill because of the component shortages will shift over to the December quarter.
Yeah, and we've talked about that a lot, Karen, in terms of supply constrained, but then it goes to the next quarter. So what's the real downside?
Right. If you think about, is it a sale denied that won't happen, delayed or denied, right? If you don't go to a restaurant because it's closed, that's
you're not
it.
going.
Yeah, that's been used up. But
especially on a refresh cycle, right? I mean, that's what they're doing. And it's interesting because Apple's maybe the biggest manufacturing company in the world. We haven't really heard this from them. They haven't really shown weakness in what's ailing everybody else. And that December quarter, I think the street's somewhere around 83 million units. I mean, maybe it's going to be bigger.
I feel like they have a couple times had some production issues or slow at the beginning of the pandemic, I think, maybe. But I don't get that this should be a big negative if it is. I don't know. I'm in your camp.
Yeah, unless Guy is concerned about a sequential decline in margin. Or it is a concern that services revenue will go back to the way it was pre-pandemic.
Right, and then people say, well, if that's the case, to sort of dovetail that, are they deserving of the premium multiple they're getting with the EPS growth, which is in today's world, it's not what we're seeing with some of the other companies like Google and Facebook, for example. So that would be a concern. I would say once again, in terms of the price action, we saw this exact same thing playing out. Last quarter, it found a home around 124, so off of 138. I would submit that 138 level, which was resistance last quarter, will become support here. So, again, if it gets there, to Gene's point, I think you buy it with both hands.
All right, we'll keep an eye on Apple for you.
Shepard Smith here. Thanks for watching CNBC on YouTube.